Hey, how we doing today, YouTube? Uh, it's Trippy Trader coming at you with a new video. 2 days in a row this week. That's how we're doing it from now on. Getting back in routine. What's this? Charleston overrun by tourists. American cities are taking aim at hotels. Oh, that seems interesting. Might read that later. But anyways, yes, let's get into the market recap. Still, today's date is October 16th, 2019. We are still trading the micro E-mini S&P 500. Probably will be trading the micro E-mini S&P 500 for a while. I've noticed there's not many people that actually make videos about the micro E-mini S&P. Uh, so it might be a good thing. I definitely should. I'm thinking about doing some advertising this week on my videos. I've not told anybody about my channel or done any advertising whatsoever. I've been waiting to actually get some videos made. Well, today's might be the day. And I'm also thinking about getting a webcam so you can see my face. Because I had some YouTuber tell me that I should do that. Steve Richards, if y'all know him. But anyways, let's get into the video. Yesterday, we were at the 3,000 mark. Uh, failed to break through the 3,000 mark, which we've failed to break through for the last, since August. So really not much surprising there. Today, looks like we tried making a few more runs up to the 3,000 mark. We're just in a range today. So far this morning, like I said, I'm just doing a morning recap. So as of so far this morning, it looks like we're just running in through ranges. And at this point, from what it looks like we are going to run through a range. It's 11:30. I didn't really make any trades today. I got on here late. I'm looking at this. This is catching my eye, but I'm not sure if it's going to channel down or not. You can tell volume has slowed down a lot from this morning. This morning was pretty hectic. Uh, this morning with all these trades, honestly, I don't like trading in markets like this. I mean, it's not bad. Sometimes I'll get in, but like, I mean, as soon as you get in your trade in 2 seconds, you're gonna be at like, you know, it runs a lot. It runs pretty quick, per candle. I like kind of trading more in a market like this, to where it moves and kind of more smooth. Like this kind of market, I feel like you're just gonna get stopped out. I've talked about this multiple times in my videos. You're just gonna get stopped out. Uh, on these trades. I mean, I'm not going to say you can't not trade these because I'm sure there's people out there trading them, obviously, making money off of it. But for my sake, uh, I just like to wait for it to cool down, like around here. This isn't a bad area for me to get into, like around 9:30 and back there. But it seemed like this morning it was just hectic. Like it looks like there was a bunch of volume coming in this morning. I feel like it was trying to make another run back to 3,000. But you can tell 3,000 is obviously a strong resistance level because we've been battling it for months now. Uh, I haven't done any fundamental research in a while. I gotta look into it. The only thing I really know right now are the federal interest rate cuts. But I definitely look into that today. Might go get some coffee, do some work. But overall, the market looks pretty good. We got a range day, so on range days, you're wanting to buy the support and resistance is where you're going to want to trade at. You got a bunch of key entry levels. I don't even have my freaking moving average up yet, or my tick counter. Here lately, honestly, with trend lines and stuff, like before in my other videos, I used to have like my trend lines set up perfectly, like in every video. See, this is what I was talking about right here, about it trending back down and running back down here. I was thinking about getting on that, but I hesitated. I'm not sure how I feel about getting in right now. It's past 11:30. I usually don't trade past 11:30, or I would probably have taken that. But you can tell we're in a range. I mean, when the market just moves up and down between the moving average like this, you're just in a range. And it's once you watch the market every day for so long, you can just kind of look at it and tell what market you're in, whether it's an uptrend or downtrend. Same with these trend lines, you can pretty much tell the support and resistance levels in your channels just by looking at it. Your tier 1s, your tier 2s, like you got tier 1 through here. Uh, but I don't really, sometimes I'll make trend lines when I'm trading anymore. I kind of just look at it Just look where I'm at on the moving average, and then I make my trades from there. Uh, if it's kind of tough to tell where it is, I'll definitely make some trends just to see, future, see where I'm at in between it. But other than that, you really don't need to. Like, I know a lot of traders, they have like, or some traders, they have like 20 like indicators, that they think it's going to make them all their money and make all their trades. But in reality, all those indicators, they go off the price action. I mean, price action tells you literally everything you need to know. That's why price action, I feel like, is more important than any other style of trading. Because, I've used the moving average crossovers, I've used the VWAPs, I've used moving average convergence divergences, the MACDs. I've had the 20-day moving average, 50-day moving average, 100-day moving average, and 200-day moving average on my charts at one time. I've used a little bit of every indicator. I've used the relative strength index. Like, back when I was trading stocks, I used to use the RSI a lot, thinking it was the gold mine. But, when I got into futures and price action, I keep it simple. The main thing I have is my 21 moving average, and then another thing I really like is this tick counter. I like the tick counter because it tells me where I'm at on the trade and how much longer I have on the candle. Because I'm not going to take a trade when there's still tons of room on the candle to run, because, in this market, a candle can change like this. So I like to wait for after the candles to be made to make my trades, or if they're like, 100 ticks remaining or something, because you can get a gist of where the candle's going to finish. But yeah, I just try to keep it as simple as possible. The main thing I focus on is try to control my risk. That's about it. I know I want to start doing live trading videos, like live streaming my whole videos. I've really been thinking about that. But anyways, let's get into the market recap. So, like I said, 3,000 level, 5 o'clock comes. We're still trying to start going through there. We're in a range today. We got a bunch of volume coming in through here. So, not many trades at this point. It's only 8:30. I mean, I guess at this point it kind of confirms, where your resistance levels are. So, honestly, right here would have been a good trade, but we'll get into that later. Run down through here. Uh, you can tell we have a bunch of volume trading at this point, which sometimes with the micro Emini S&P 500, I feel like that is an issue where there's not enough volume. Then sometimes there's, a lot of volume. But relatively compared to the E-mini, it's not too bad. Just depending on what tick you're running at. You're not going to run the same tick chart on a 2000 micro E-mini or the E-mini future as you are this. I know a lot of people like running 400, 500 ticks on the micro E-mini, but I don't really see the point of that. I don't see it necessary. I feel like the 1000 tick is just perfect for it, because with the 400, you're getting indicators every 5 seconds. You're getting a signal every 5 seconds. I feel like with this one, it works just as function for me. That's me. That's my opinion. Not, every trader is going to be different. I mean, I'll still play around with it, depending on the volume. Like, in this kind of market, I'd keep 1000 tick, like 400 tick. I mean, just look at this. It's probably going to be, look at that. I mean, it's definitely going to be a little bit trickier to trade. I mean, look at that. I mean, unless you want to get in, look at it. Every candle goes up and goes down, up and down, up and down, up and down, I feel like it's harder to get signals with that. So I try to keep it at 1000. Anyways, yeah, we come up through there, try to get another run up to the 3000. That fails. So we come back down here, and right off the bat, you can tell we have a nice support level in here. And on range days like these, these are your crucial, these are your key entry spots. Your support levels where they keep retracing, because they're going to hit them more than once. Same with the resistance levels, they're going to hit them more than once. And these are your key entry levels that you want to get in and get your trades at, I mean, don't get me wrong. I mean, there's still some times in the middle where you can get into, because, you still have room on the downside and you still have room on the upside. That's what's nice about it. As long as you know as long as you can confirm you're in a range. but it's still early in the morning, so anything can happen. But 9:30 opens. As soon as the market opens, right before the market, we have another little sell-off right here. The market opens, we get another runner back up there, and then this runner fails. And this, honestly, this wouldn't be a bad short right here, because I mean, look at this. You got a 1, 2, 3, 4, 5. You got 5 attempts to break higher at this point, you know. And after 5 failed attempts, you get this huge bear candle right here. So, and the volume kind of settles down from right there too. So this wouldn't be a bad time to get in, get a short. Now, like I said in the videos, yeah, I might mark all these trades as trades that I would take. Now, not necessarily saying in the moment that I will take them. So I'm not saying I'm a god or anything, and that I make all these trades. These are just trades that I've missed throughout the day in the morning. Trades that I could have taken that I didn't take. Because the whole point of these videos are just self-reflection. But come down here, you get a short right there, and then you got another retest back up there. Got a fail off the moving average. This one is kind of iffy. Not sure how I feel about that one. But you're kind of really choppy at this point, you know. You're mostly just moving sideways. You're choppy. So wouldn't really necessarily get in right there. It's kind of congested. We come down here, and then we're at another key entry level that we were at before. Now, I wouldn't necessarily buy the bottom, you know, right off the bottom, because you never know what could happen. I always like waiting for the candle after the candle that you think you should buy. Like if I feel like if my brain tells me to short right here, I'm gonna wait a candle or two until I actually take my short. Just to be 100%, because you know sometimes you're going to get excited. You look at this point, you got this support level right here. You're going to get excited when you see this, a bounce right off that level. So you're going to want to get in right there. But I like to wait to get a confirmation, and you get this confirmation right here. As soon as this level right here, it breaks through there, I would take this trade at this point, because you already have a fail right there. It tried breaking lower, but it failed to break lower, and you're at the bottom of the support level. So therefore, on this candle, this red candle shows that it failed to go lower. You still have this little bit of risk right here. This is your risk on this trade, because this is your support that you have in this area right here. So when you get in on this trade, when you buy it, your risk, your stop loss that you're looking at is right here for it to go on the downside. So the odds are in your favor. Not all the time, but I feel like most of the time in this area, your odds are in your favor, because there's less room on the downside for it to move. And when you're in a range day and you're at the bottom, there's more room on the upside for it to go. Rather than taking a buy right here, whenever you take a buy, you want to look at the strong support levels as your risk. That's what you want to look for the price to move back to in case the trade goes wrong. So if the trade goes wrong here, you're looking at, you got a pretty big gap for your strong support level in this area. And you don't have much room left on the top before you get to this resistance level. You don't want to trade into the resistance. You want to trade from the support. So since we have this gap right here, you take in, you get this buy, you take this trade. I'm going to mark this one up. You take this one, you set your stop loss down here, or try to keep it a few points, just a couple points. I mean, you could probably just run your stop loss down here, and you're going to be the odds are going to be in your favor, considering the downside versus the upside. So therefore, this is a pretty good bullish trade. I know I've been talking about that I don't take many bullish trades, but this is a nice buy right here, honestly. So you get this buy, you get a runner up here. You got your few ticks already. You made your money for the day. You're done trading. And plus, we still have room for this resistance level right there to try to push up to, too. So, I mean, this is a nice trade that you have plenty of room to move on the upside with and less room on the downside. You come back up through here. Now, this trade, I'm not sure how I take it because, you're coming into this resistance level that was right here. So, I'm not sure how I would feel about taking this trade considering that. Definitely would like to wait and then you get this green candle coming up, and then you get some nice hold. It holds this level. It holds a nice support right here. So this necessarily wouldn't be a bad one. I'd mark this kind of. I'm not sure exactly if I would take it. Not saying I would exactly, but I mean, here I'm gonna change the color of that. I'm gonna set these to default. But change this color up. Anyways, yeah, not necessarily saying I'm going to take it 100%, considering there's still, there's still a little room on the upside. You don't have much room, but the only reason why I'm saying that this would be takeable is because this shows support. This is showing your new support area, rather than if it was just running up. Your last support's kind of down here. This area is showing you some support, so it's showing you that the price is holding at this level. So, if you take this trade, you can set your stop loss down there and still be more confident with it, because it's showing that the prices are holding right there. So that's a good thing. Look at this going back up. But it's holding this. And then you get another runner back up to the resistance level that we're running at. And this would be a nice short, because, look at this area. That's kind of like this trade down here. You wait for the second one. This is a nice one right here that I would take it for sure, just based on that nail, the doji. But you come up through here. This is a hammer nail, but this candle. But you come up through here. You have this resistance level. You get another fail at that key entry level, and it's at around the 3,000 level, which we have been trying to break through, which we failed yesterday, and we failed again this morning. So once it fails again right there, this definitely could be a short. If you have your, now this trade, I wouldn't necessarily look at this trade for, huge scalp, which I mean, you could have definitely got a nice scalp on there, but in the moment of the trading, I'm not sure if it's going to pull down and retrace back up and try to hit 3,000 and sell back off. But close is usually close enough. So you take this. I definitely just keep my price target at 4 ticks, 5 ticks. I'd keep it short. I'd get in here, get my money, and get out. And since you have the less risk on the upside, this is your risk that you're looking at. You can set your stop loss right here, and you're more comfortable knowing that there's a strong resistance level up here. Since there's a strong resistance level up here, that you're going to be, it's more comfortable. Like I feel like I've said that word 10 times now. More comfortable for you to get in on this position. So you get in up here, you have this less risk on the upside, and you run back down here, you get your scalps. This is the trade I was looking at just when I started the video. Now this one is past 330, but it's off the moving average, and you've had to run it back up here, and we are in a resistance area. So I'm not sure if I would take that one exactly, considering that there's also previous support right here. So I'm sure somebody took it. Me myself, not saying that you can't take it. I wouldn't take this one. You run back down here, and as this area, we're at where we are now. It looks like we're trying to make a run back up to the resistance level. Maybe we're going to try to make a run back up to 3,000 today, or maybe we're just going to stay in this channel and just run a range all day. But that's the thing about the market. Anything can happen. It's a blink of an eye. That's why you can't be biased, and that's why you have to trade both sides of the market, and you have to admit you're wrong in the split of a second. Like, there's sometimes I'll make a trading decision, and I'll be like, okay, I want to buy. Or I'll be like, okay, maybe I want to buy. And then the next candle is a complete opposite candle of what I was looking for. So in that split second, I have to change my decision and realize that the market's not going in that direction that I thought it was going to go. So then I have to change my whole theory with it and go on the other side of what I was thinking. Your mind's always changing in this market. You can't just think, oh, it's going to buy because, that's what you think. You have to read the market, read what it's telling you, because it's going to change up in the split of a second. And I feel like that's where, profitable traders come into, is they're able to completely change their minds in a second and realize the direction of the market, and they follow the market direction. That's how you make your money. You know, they're not just trading off their gut, their pride, their ego, or anything. They know they're wrong when it comes to the market. The market's right most of the time, so they know that, you know, they're not going to go against the market. They're going to trade with the market. They're going to do what the market tells them to do, and that's the whole point of price action, is just following the market, pretty much trading on its back. You know, if it's going down, you know you're going to get in on it while it's going down. Like, the way I look at trading now compared to how I looked at trading last year is a completely different outlook on it. Like, I mean, with all the moving, like with all the indicators I used to have and how just simple I try to keep it now, definitely changed a lot in the last year. I'm not saying I'm a professional in any way, you know. I'm not making enough money to live off on this. I'm not barely even making any money on this. So there's still plenty of room for me to learn as well. And that's the whole point of these videos, is to get better. But looky here, we got another runner back up to this resistance level. So let's look, see if it breaks through this level. Like I was saying earlier, it might run back up to this top. But looky here, we kind of got to fail right there. Yep, that's it for the video today. I'll have another one tomorrow.